I thought this would be an interesting one. Look, Blake, we're not going to hold positions for a year. We're not going to do that. If we're not sell-side banks, we don't come out and say, we think the dollar's going to go down 5% for the year, or we think the S&P is going to be at 3,500 by the year end. I mean, for me, that's not what trading's about in any capacity. And in fact, it just makes you fall in love with a view, which is to your detriment. But for me, let's go into to what I'm looking at now. I'm not going to say one specific asset. I'm going to go with this idea that I think we're seeing a rerun of 2018. And my first point is that I want to be a ninja. Okay, so what do I mean by be a ninja? I mean, I want to trade with stealth. I want to trade with a certain nimbleness. And I've got this view in my head, which I've said that I think that we're setting up for 2018. Real rates are pushing higher. We've got deteriorating growth prospects. We've got central banks that are looking at inflation and just going after inflation, that are not prepared to support the markets. The markets are seeing a vision that's not being shared by that. We could get drawdown. And as that deterioration in data comes through, I think we're going to see a drawdown. I think the dollar's going to rally. I think equity markets go down. I think vols go up across asset class. And I think gold will do pretty well in that situation as a recession hedge, and real rates probably moving a little bit lower. We talked about that. So I think, in that environment, I think my picks would probably be gold. I think gold's going to be a really good place to be. The market's already shown you they like that. In FX markets, I like the Swiss franc. Who doesn't like an 8% current account surplus when global growth is deteriorating? This idea that you've been repatriating savings all around the world, you're bringing them back. The Swiss franc suddenly works much better than it did in 2022 as a safe haven. The Japanese yen's another place. We've already seen signs that as bond yields are falling under growth concerns, that the Japanese yen is working well, and that's actually reverted back to its safe haven qualities, which it lost, of course, when bond yields were moving up and people were, looking at putting carry on. But I think the Swiss franc and the Japanese yen would be my pick, and then the US dollar will probably work selectively against the high beta FX, Aussie, Kiwi, and maybe the pound as well in that situation. But I think that we will get the pivot. Now, a lot of people would disagree with me, and that's fine. But when we do get that pivot, and I think when does it come? I don't know. Predicting that pivot is a fool's game. I don't. But when we do get that V-shaped bottom, or we do see those flows changing, then I've got my vision on how that's. I want to be long the Aussie dollar. I want to be growth. I want to be Nasdaq. I want to look at all these factors that play well in a market where a lot of this cash on the sideline comes in. So my idea is trade like a ninja. If markets are deteriorating on that vision, I know what to trade. I know the markets that I think are going to benefit the most and how I can generate alpha in that situation. But when we get the turn, and I think we will get the turn, how do we recognise that turn? What to trade in that? So that's my view. Trade like a ninja. Trade with some stealth. Be nimble.
All right. Well, my view is kind of like yours, Chris, in the respect that I do think that the recession is going to recession fears, and actually the length of the recession, the heaviness of the recession, if you will, is going to play heavily on equities. And I think the place that you want to be is the dollar, but I don't think the dollar is going to hit a new high. I think the dollar is in process of carving out a longer term high. So I actually want to sell dollars as we get into probably your pivot, wherever your pivot is, Chris. Once the market sees the light, and that's where you want to sell dollars, but I want to buy emerging market currencies, specifically the Mexican peso. I do believe Mexico is a big beneficiary here on this side of the world. From China, Mexico is where a lot of manufacturing is going here from North America, just all the way around. I want to be long Mexican pesos. So any rally in the dollar, I'm selling that dollar longer term. But I think the euro could actually dip towards parity again. And I think we might even trade slightly below parity. But at the same time, I do think that I will be looking to sell dollars on any significant rally this year in 2023. But I think the first half of 2023 is going to be a rough one for risk, just in general.
That's right. I think the Mexican peso is a really interesting place to be as well. I mean, if we get crude prices popping up because the China reopening trade, then the Mex is going to benefit that. You've got a sort of beneficiary because it's close to the US, and I think in that situation it got a little bit of a safe haven thing relative to some other G10 high beta currencies. So I don't mind the Mex, and of course they're going to continue raising rates. They've already got 10.5% interest rates there that give you that positive carry. So I don't mind the Mex. So I think that's an interesting place to be. But I think that's probably a good place to wrap it up. We've gone through a multitude of views as quickly as we can, and it's really interesting to see how people, I'm talking to, and the clients I'm talking to, and I know Blake with his Forex analytics community are talking as well about their outlooks and the trigger points for 2023. And I know you guys out there have got some very strong views. So leave us a comment about how you're trading the market, your vision and views for 2023. And to all our regular viewers for the trade-off, we really appreciate everything that's gone on this year. We've built a good community, some really good regularity comments coming through, and we'll be back more for next year in what we hope will be a huge year for financial markets. So we'll see you then.